Good morning, everyone. This is the fourth lecture of theory, of course, for chapter 7 that we have been doing, which is dissolution of partnership firm. Let us quickly revise what we have done so far. The very first lecture we have had an introduction about the chapter. We understood the difference between dissolution of a firm and dissolution of partnership firm. The next lecture we have understood about the methods of dissolution of partnership firm, the two methods. And the next lecture we have understood the legal provisions and accounting treatments and the general procedure of dissolution. So now in today's lecture, the fourth lecture again of theory, let us see what is the topic. But before that, there is a request that you will watch this lecture till end for complete understanding. So, we are dealing with the accounting treatments at the time of dissolution. And as you all know very well, that the books of accounts are closed at the time of the dissolution. Yes? Why? Because the entire business is to be closed down. This is the reason the books of accounts are closed. We have understood the general procedure. And the sixth point in legal provisions and accounting treatments, that in what order the payment is to be made. The very first thing was the payment of dissolution expense, the payment of liabilities, loan, capital, current account, etc., etc. Yes? So, this is the process which takes place when the books of accounts are closed because of dissolution. To incorporate complete procedure of dissolution, several accounting treatments are given. Of course, the accounting treatments are to be given at any point, any part of the changes taking place in partnership firm, if it is to be closed down, admission of a partner, retirement of a partner. Yes, similarly, accounting treatments here are given at the time of dissolution. The process of dissolution, at the time of process of dissolution, let us see which are the accounting treatments to be given. Okay, they say these are the accounts that you are supposed to prepare. Preparation of necessary accounts. Just the way we have understood in chapter 5 and chapter 6, that what are the accounts that you are supposed to prepare at the time of admission of a partner, retirement of a partner. Similarly, at the time of dissolution, which are the necessary accounts that you are supposed to prepare. Yeah? Now, an important point to be highlighted here is that the long sums from this chapter are not expected. Yes, I repeat, long sums from chapter 7 are not expected in examination. The chapter consists of, the weightage of this chapter consists of MCQ, VSQ, and 2 short questions of 3 marks each. So these accounts are to be prepared as a part of long sums, and long sums are not a part of your question paper of the weightage. Yes? So we'll just understand the basic theory related to same. The question might be that which are the accounts to be prepared at the time of dissolution. So of which first is a realization account, partner's loan account if any. That means in the given question, if it is mentioned that the partner has given loan, only then partner's loan account is to be prepared. Partner's capital accounts or current accounts. Finally, cash and bank account. So these are the accounts to be prepared at the time of dissolution, during the closing down of partnership firm. Okay. The important of all, the very first account, realization account. It is important to understand this. They say an account which is prepared at the time of dissolution to give the accounting treatments to dispose of assets and payment of liabilities is known as a realization account. Understand. Realization account basically is an account which is prepared at the time of dissolution. That means when the partnership firm, the firm is in the process to close down. So, you are supposed to sell all the assets and you are supposed to pay all the liabilities. Yes? You will dispose assets, that means you will sell them and you will pay liabilities. Yeah? So, to incorporate this adjustments, the treatments, accounting treatments of selling all the assets and payment of liabilities is known as realization account. Just the way you record all the changes regarding the revaluation of assets and liabilities, the topic that we have understood in chapter 4, chapter 5 and chapter 6. Yes, we have understood about the preparation of revaluation account, and what you were writing in that is that you were giving all the effects related to the revaluation of assets and liabilities. Yes, similarly, realization account is prepared for the accounting treatments of sale of assets, that is to dispose of assets. Why? Because the business is to be closed. Yes, so you need to sell all the property, all the assets of business. Yes, and the amount realized from that is to be utilized for the payment of liabilities. Yes, so the place where you record all these changes, the place where you record the accounting treatments of assets and payment of liabilities is known as realization account. Alright, this can also be asked as a part of your definition in one mark, the important definition. And several important points related to realization account are here presented on your screen, of which the very first point says to close assets and liabilities. I repeat, to close assets and liabilities excluding cash and bank are transferred to realization account. So we have understood the definition of realization account. Now we are understanding the process of preparing realization account, that what are how accounting treatments are given in realization account. They say, firstly, all the assets and liabilities excluding cash and bank account, the balance of cash and bank are not to be transferred to realization account. All the other assets and liabilities can be closed and transferred to realization account. We have necessary journal entries with the same regard ahead in this chapter. So for now you just need to understand the basic theory that I am explaining. We have journal entries related to each point which will make things clear in a better manner. Then the second point says, subsequently amount realized from sale of assets is debited to cash account and credited to realization account. Now the process is that you will close the accounts of all the assets and liabilities. You will transfer it to realization account. Thereafter, the second point is that you will sell these assets and the amount that is realized is debited to cash account and credited to realization account. So the assets have been sold now, so the amount that has been realized will be utilized for the payment of liabilities. So payment of liabilities is debited to realization account and credited to cash account. I repeat, these points will be more clear once we will deal with the journal entries. Yes, journal entries will be explained in the very next lecture to this. So for now, just try to understand the basic theory. When you will apply this theory in those journal entries, that time you will be able to understand it in a perfect manner. Right now, understanding it at this moment is little bit difficult, I can understand. Yeah? Fine then. We've reached to the fourth point, and the fourth point says, the difference of realization account will be either profit or loss. Obviously, whenever you balance a particular account, just the way we used to balance revaluation account, yes, and the amount of difference was to be treated as a profit or a liability, isn't it? Yeah. So the same case, the difference of realization account will be either profit or loss. But as I said, the long sums from this chapter are not expected. So there is no need of preparing realization account separately. Maybe we have several short sums, and when we will prepare this account practically, the things will be more clear. These theory points will be more clear that time. Finally, the fifth point, it says the difference is allocated between the partners in their profit sharing ratio. Yes? Again, let us compare this with revaluation account. The amount of difference in that account was profit, either loss. Similarly, the amount of difference on balancing realization account is profit or loss again. Profit or loss, whatever the case is, it is to be transferred to partners' capital account. If it is profit, it is to be credited to the capital account of partners. If it is loss, it is to be debited to their capital accounts. So this is how realization account is prepared. Yes, we have understood the definition. We have also understood the relevant points regarding preparation of realization account. Let us see which is the next point. Yes, you have a specimen of realization account presented on your screen. This specimen is also given in your textbook. Probably it is given on page number 286 of your textbook. But before that, there are ample of journal entries presented in your textbook that we are yet to understand. We haven't understood the journal entries, and the realization account presented on your screen has been prepared on the basis of those journal entries. The image has been captured here with the reason that we have understood the meaning and preparation of realization account. So this is the specimen just to show you, and this will be explained further in lectures once we are done understanding journal entries related to realization account. Alright. Okay, the second account to be prepared is partner's loan account. I repeat, we are just understanding the theory part of preparation of accounts. Long sums from this chapter are not expected. So just let us understand the theory. Partner's loan account. Now many a times partners provide loan to the business for financial assistance. Obviously there is requirement of money in the business, so you will have to take loan from certain person, and that certain person could be a partner itself if the partner is in a position to provide loan to the firm. Yes? So now that the stage is of closing down the partnership firm, everything is to be repaid. So during that time, how do you deal with the loan account of a partner is what they explain here. So it says, at the time of dissolution of a firm, partners' loan are repaid prior to the redemption of the capital of partners. If you remember, we have understood this point in the previous lecture itself. The payment procedure consisting of 5 to 6 points, if I am not wrong. The very first point said the payment of dissolution expense. The second point said the payment of liabilities. The third point said the payment of partner's loan. Yes, if you remember. And if the amount is not sufficient, the amount of loan is to be repaid in the proportion of loan of partners. Yeah, I have explained this in detail in the previous lecture. So the next step to that was the payment of capital. So here they say that partners' loan are repaid prior to the redemption of the capital of partners. This simply means that it is repaid before the payment of capital. The amount of loan is redeemed before the redemption of capital, I can say in simple words. Alright, next. It is the third account to be prepared. Partners' capital accounts, current accounts. Yeah. At the time of dissolution, partners' capital is redeemed after the payment of all the liabilities. Obviously, the payment of all the outside liabilities, the third party liabilities is what they mean here. The payment is to be made for all the liabilities, and only then the amount of partner's capital is redeemed, not prior to that. Even after the repayment of loan, yes, the payment of all the liabilities, the payment of partner's loan, and then comes the step for the payment of capital of partners. Yes? Fine. The next point here is cash bank account. You know very well how to prepare this account. We have learned this in chapter 5 and chapter 6. We used to prepare cash and bank account, yeah? And also in this chapter we are preparing it at the time of dissolution, but we are not going to prepare this because we are not going to solve the long sums. But let us understand the basic concept for this. They say, since the firm is dissolved, all transactions are done in cash form or through bank. Obviously, because you have sold all the assets and you will pay all the liabilities, this simply means that transactions are done in cash or through bank. The payment involves these two words. Yeah. And also they say that cash account is not transferred to the realization account. Why? Because cash itself is an amount. All the assets and liabilities accounts are to be closed and transferred to realization account at the time of dissolution, except for cash and bank account. You cannot transfer the balance of cash and bank account in realization account at the time of dissolution. Yes? But you will transfer all the assets and liabilities. Alright? So, we've understood about the preparation of necessary accounts. We've understood them in detail, of which realization account is the important of all. You need to read this topic thoroughly. It is given on page number 278 of your textbook. It is also expected that the short note on realization account might be asked as a theory question of 3 marks. So it is given in detail in your textbook again, page number 278, for a better understanding, for learning, for writing it down properly in your fair book. All cash receipts and payments are recorded in cash bank account. This is a very simple point. There needs no explanation. Whatever amount is realized on sale of assets and whatever amount you pay in cash will be recorded in cash bank account is what this point says. Okay? So let us see what is your homework for today. Is you are supposed to write down a short note on realization account once in your fair book, which is given on page number 278 of your textbook. I repeat that you will write down the short note on realization account, which is given on page number 278 of your textbook. Yeah? We've understood realization account properly in detail. Here is the definition that we have understood. Realization account. These are the important points. Can be included in short note. And this is the specimen. Let me clarify, you are not supposed to write down the specimen. You just have to write down the short note on realization account. I hope I'm clear. So let us quickly revise whatever we have done today. So as I said, this is the 4th lecture again of theory. we've understood all the basic concepts turn by turn in the previous 3 lectures, and today we have understood the preparation of necessary accounts at the time of dissolution. The question can be that which are the accounts to be prepared at the time of dissolution. Such a question can be a part of your exam from this chapter, of which the very first is realization account, partner's loan account, partner's capital or current accounts, and cash and bank account. Realization account, this is the definition. These are the important points related to realization account. Will help you in writing down the short note for this topic. This is the specimen of realization account, which you will understand properly in the next lecture once we are done understanding the journal entries related to realization account. Just in the manner we have understood the journal entries for revaluation of assets and liabilities, similarly you are going to understand the journal entries related to realization account. Alright? And on such basis, on the posting of all those journal entries will help you prepare realization account, which is presented here. Yes? Then we have understood about partner's loan account. We have also understood this while understanding the procedure of payment, which was an important topic, that the amount of loan is paid prior to the payment of capital and after the payment of liabilities. Then it is about partners' capital accounts and current accounts. They say the payment is made after the payment of all the liabilities. The third party liabilities is what they mean here. Then cash and bank account. They say that the balance of cash and bank is not transferred at the realization account. This simply means that the balance of all the other assets and liabilities are to be transferred to realization account, but not cash and bank account. Whatever you will realize on the sale of assets, that means whatever amount you will receive in cash, which is cash receipt, and the amount that you will pay from the realized value of assets are recorded in cash and bank account. And finally, this is your homework for today. Make sure you read this concepts of theory in detail also from your textbook, and you will also study this video lectures on repeat mode so that the topic becomes more clear. Yeah, and also, as I've said always, that you will study the previous lectures before you study the current lectures, because everything is linked. It is not possible for you to understand the second lecture if you haven't come across the lecture 1. Yes? So please develop a habit of watching the lectures properly and in order. So here we end our session for today here, and in the next lecture we are going to understand the journal entries related to realization account and how is realization account prepared on the same basis, which is given on page number 279. The topic for the next lecture will start from from the topic which is given on page number 279 of your textbook. So be prepared till whatever we have done. Complete your fair books, and and we'll see you soon in the next lecture. Till then, stay home, study well, and stay safe.